So I welcome everyone of you once again to our first session. And this has been our first session. What I do basically is give an intro to my trading style, and it's more of an interactive class where you guys share with me your trading journey basically. And I give an intro. I throw light into how I trade. I throw light to how I trade, my market approach, and all of that. Yeah. So starting with you guys, I want you guys to give me a trading recap, like give me a recap, a quick recap on your trading journey, how trading has been so far. You've been in the game, yeah, your challenges and all of that, what you're struggling with when it comes to profitability, because I know that's why all of us are here, to be profitable, to know what works, yeah, and stay profitable. That's the goal at the end of the day. So, and I'm sure we have some challenges on how long we've been trading before we made the decision to come in for a mentorship, to come in for proper guidance. Yeah. So there are some challenges you guys have been facing. It could be your market approach, it could be your psychology, it could be the fact that you are yet to know what works basically. Yeah. So whatever it is, I want you guys to like give me a quick recap on your journey. So starting from Enyekan Udot, can you please unmute your mic and share with us, give us a brief recap, yeah, a quick recap on your journey, your challenges in general, how trading has been so far. Yeah, so please have the floor.
Thank you very much for
Oh,
having me here. Can you hear me?
I can hear you clearly.
Okay. I've been in the game for 5 years now,
Oh, okay.
and I've been having issues when it comes to pullback. I have issues on pullback. Sometimes I'll be making profits before I know what's happening. That profit that I've made, everything just vanished away, and um, it has been a concern to me, and that's why I said let me take a step further to learn from an expert, and that's why I'm here.
Okay. When you mentioned pullbacks, like, is it regards to your trading style, like the way you approach the market, your strategy, or what?
Yes,
Okay, regards to your strategy.
yes.
So pullbacks in the market affects you in what sense? Um, I, I want you to like
Not
elaborate.
not knowing when to leave the market.
Okay,
Mm,
okay. Like you could be in a trade and like the trade is moving in profits, then at some point there would be a reversal and you'd still hold.
exactly,
You don't know if the
exactly,
like the setup has failed or there would be a continuation.
exactly. That's the point.
Okay,
Mm,
okay, okay. It's all good. Yeah, you're welcome, bro. I
thank
would be
you.
glad to help. Yeah.
No problem.
Yeah. So Jeremiah, can you please unmute your mic and share with us your journey? You have the floor, please. As a quick recap, your challenges and all of that.
Good evening, everyone.
Yeah,
Good
good
evening
evening.
to you. Um,
Good evening, bro. Can you hear me?
okay, so
Yeah.
I've been trading for like a year plus now. So
Okay.
first, I started with SMC. So my problem was that when I first started trading, I was in this like I really started with demo account. I went into the life account, something like that. So I lost a lot of money.
Okay. Started with SMC, like a strategy, like that's the strategy you started trading with. Are you there?
Yeah, I mean, can you guys hear me?
I can hear you. You said you started with SMC. Was it the strategy you started trading with?
Hello?
Can you hear me? Can you hear me? Are you there? Hello.
Tell me.
Yeah, I can hear you. Can you hear me now? Hello, can you hear me? What could be the problem? Is it network or- Hello. I think it's from his end. I don't know.
Yeah, I guess it's having network issues.
Yeah, probably from his end. Yeah.
Yeah,
So
you can continue.
okay. Pires FX. Can you please unmute your mic and give us a quick recap on your journey, your challenges, how long you've been trading, your trading journey so far. Just share with us. Yeah.
Hello,
Yeah. Hello, bro.
can you hear me?
Yeah, I can hear you clearly.
Okay, I've been trading for 4 years now, purely currencies. So I've never traded derivative. I'm
Okay.
new to derivative. Just want to know one or two things about the
Okay.
derivative market. Justice. As regards trading, everybody
Okay.
has challenge now. So
Yeah.
in terms of my FX journey, it has been a steady progression. So that's just it. I know when to enter, when to exist. I will trade for weeks and all that. For the best part, we've talked about it briefly on
Yeah.
Telegram if you can recall.
Yeah, I can
So
actually.
that's it's just only derivative market. I just want to have an idea of that stuff.
Thank you, brother. You're
And
welcome.
yeah, yeah. Thanks.
Okay. Okay. You've been trading for 4 years, the currency
Yeah,
market, and you
yeah.
felt like navigating to the synthetic indices, or would say trading the synthetic indices alongside currencies, and you'd want to know more about the like you want to like you need a good knowledge and guidance on trading the synthetic indices. Am I
Yes, yes.
got you right?
Yes,
Okay.
yes, yes.
Okay. It's all good. Robinson said he's in a taxi, so yeah, I think we should just proceed. So I've got all you guys said and the quick recap you guys have given on your journey and all of that. Okay, would say the most of us are not beginner. We are not actually beginner traders. We've got some experiences in the market. Would say we are probably advanced traders or intermediate traders. Let me put it in that class. Yeah. So and we need more knowledge and more guidance to stay profitable trading the synthetic indices market. So I've been trading this market for quite some time. This is like the third year now. I started with the forex markets. I've traded the forex market for 2 years. Yeah, 2 years plus. I've been trading for 5 years in general. So forex market for 2 years. Synthetic indices. This is the third year, and yeah, it's been good. It's been all good so far. So far, so good. Would say. So yeah. So basically, my market approach and strategy is very simple and easy to understand. The way I approach the market is very easy and simple to understand. So when it comes to trading, I try as much as I can not to complicate my understanding and view towards the market. I I make everything simplified. Yeah. So in a nutshell, I am a price action trader. I trade the market moves. I'm a pure price action trader, I would say, yeah. And I base my market approach. I base my approach to the market on market structure and other blocks. These are the two major things I work with when it comes to market prediction, market structure and other blocks. These are the two things I work with here. So in some cases, I just add up the Fibonacci retracement to for an extra confirmation, but mainly just market structure and other blocks. Yeah. So what is this market structure? What is market structure? I'm sure you guys have heard of market structure and all of that. Some of you might know what market structure is and have an understanding of market structure, why some don't. Yeah, so for the sake of those who don't, market structure is basically a trading concept that describes the current state of the market and its direction. It's a trading concept that describes the current state of the market and its direction. So for us to make money from the market, we need to know the state of the market. That's the first step, basically, to know the state of the market. Is the market in a bullish state? Is the market in a bearish state? Or is the market consolidating? So the market, with the help of market structure, we can know this. Yeah. So with market structure, we can know the trend direction. I'm sure you guys know what trend is. Yeah, we are not beginner traders, right? We can know the trend direction. You can know the potential reversal points in the market. You can actually jot down if you are with anything, yeah, your pen and paper, your writing materials, yeah. So you can know the trend direction. You can know the potential reversal points in the market with the help of market structure. I've listed two things now. The trend direction, firstly, that's the market trend in general. The potential reversal points, support and resistance levels. We can know support and resistance levels with the help of market structure. We can know the swing highs and the swing lows with the help of market structure. And we can lastly, we can be able to read the market behavior. Yeah. So with all these put together, you can have a good market prediction. Because the first step to making money from trading is to predict the market, right? That's the first step to make money from trading. So with the help of market structure and knowing what comes with market structure, putting all of those together, you can have a good market prediction. Because that's the first step to making money from trading. You need to know when to buy and when to sell. You need to know when to wait. Yeah. So you need to look at the charts and be like, okay, you expect price to buy at so level, or expect price to sell at so level. So with the help of market structure and having a good understanding of market moves, you can tell when market is going to buy and when market is going to sell. That's the first step to making money from trading. Because if you can't tell or identify the buy and sell zones in the market, there's no way you can make money from trading. You'd see yourself expecting price to buy from a zone while it sells from that zone. That's you losing money. And you see yourself expecting price to buy from a zone when it's sorry, see price, you expect price to sell from a zone when why price would go to that zone and start selling. That's you losing money as well. So you need to be able to, your prediction needs to be on point. Yeah, let me just put it that way. Your prediction needs to be on point when it comes to making money from trading. Your market predictions have to be on point. You need to tell the market is going to buy from so area, from so level. You need to be able to tell the market is going to buy from so zone or area, or sell, basically. Yeah. So market structure has a nature of creating, so the market basically has a nature of creating series of highs and lows. Yeah. I'm about to explain the market structure now. Yeah, giving a quick sketch of the, okay, yeah. Change this thing to market structure. Alright. Structure. This way. Very good. So the market has a nature of creating series of highs and lows, and these highs and lows comes in three different states. Yeah, these highs and lows comes in three different states. It could be price creating series of higher highs and higher lows, price creating series of lower highs and lower lows, price creating series of equal highs and equal lows. So we'd say these are the three phases of the market. These are the three states in which the market can be in. So when price creates series of higher highs and higher lows, we'd say the state of the market is bullish. Market is in a bullish state. And when price creates series of lower highs and lower lows, we'd say the market state is bearish. And when price creates series of equal highs and equal lows, we'd say the market is consolidating. The market is neither bullish or bearish, but it's just consolidating. It's moving in a zone, in a range. Yeah. So these are the three states of the market. These are the three states in which the market can be in. The first one I mentioned is price creating what? Series of higher highs and higher lows. series of higher highs and higher lows. That's the market in a bullish state. Yeah. So how do we tell when the market, how do we identify these highs and lows? Why do we call these highs and lows, high highs and higher lows? Yeah. So this being the so sorry, as I was saying, you guys can hear me, right? Yeah, so this is the market in a bullish state. We have price create series of higher highs and higher lows. So how do we know this? How do we tell that the market is creating series of higher highs and higher lows? Yeah, firstly, the market starts with creating either a high or a low. So at this point, there was a low formation here. Let's call that a low, and let's call this a high. Yeah. So the market created another low, which happens to be at this point. So we call this what? A higher low, because this was the first low. Why this happens to be the second low, which is higher than the first low. So confirming why this is called a higher low, when we check the price value of the first low, we'll see that the price value is at 6,803. We can see this the side of our screen here. The price value is at 6,803. That's the price value of the first low. Why the price value of the second low is at 6,846. 6,846 is higher than 6,803. That's why this is called what? A higher low. Yeah, that's why this is called a higher low. So this is called a high. Remember, the market formed a low here and a high. So another high comes to form after this low formation. Price pushes up to form a high, a higher high. We call this what? A higher high. Remember, we first said this is the first high, or this is what? The second high. So this is what? A higher high. So checking the price value of this first high, which we called the highs firstly, this value is at 6,946, as we can see. Yeah, and the price value of this is of the next high, that's the higher high, is 7,080, which 7,080 is higher than 6,946. That's why this is called what? A higher high. So that goes on. The market keeps creating subsequent higher highs, subsequent highs and lows, which are higher than each other. So in this market state, you can say the market is bullish. The market is in a bullish state. So what do we do in a bullish state? We look out for what? Buy opportunities. Our interest and focus should be on the buy side of the market. Yeah. So this being the what? Under low, the market formed a higher low. Price pushes up to form a higher high, higher low, higher high. We can say this is an equal low, because the market can sometimes create an equal low here and continues buying. So this is an equal low here. Price pushed up, creating what? A new high, a higher low, and so on. So this is what the market in a bullish state, in a bullish phase. So at this point, you can say the market structure is bullish because the market has been creating series of higher highs and higher lows formation. So yeah, the current state of the market determines our focus and interest in the market. The current state of the market determines our focus and interest in the market. So being that the market is in a bullish state, the market structure is bullish, our focus should be what? On the buy side of the market. We should look out for more of buy opportunities. Yeah. because there's a probability we would want to trade with the market direction. We would want to buy when the market is buying and sell when the market is selling. So with these, we have to look out for buy opportunities. Our interest is on the buy side of the market because the market is in a bullish phase. The market structure is bullish. So the next the next state of the market we got is a bearish state. Where price creates series of lower highs and lower lows. You can see the market create a high. Sorry. You can see the market creates a high, a low, pushes up, create a high, lower high, drops down, a lower low, lower high, lower low, lower high, lower low, lower high, lower low, and so on. Yeah, so this is the market what on a bearish phase where it's been creating series of lower highs and lower lows formation. So we got price create a high firstly, came back to create a low, a high and a low has been formed. So the market proceeds to creating what a new high, a lower high. Because when we check the price value of this first high, we'll see that is higher than the second high, is higher than the new high that was formed here, which this is what a lower high. And that low was formed. Remember, this was the first low. Why this is what the second low, which this is what a lower low. Because when we check the price value, let's just check it out. Just like what we did on this bullish structure, yeah. So when we check the price value of this first low, we see that this value is at 7,110, and the price value of the second low that has been formed, it's at 7,024. So 7,024 is lower than 7,110, which this is what a lower low. Yeah. So that's is applicable to other lows. They are usually lower than each other. Their price value is lower than each other. Yeah. So this is what the market creating series of lower highs and lower lows formation. Market is on a bearish state. So in this market state, we have to look out for sell opportunities. Have to look to selling alone in this market state. Our interest and focus should be on the sell side of the market because the current state of the market determines our focus and interest in the market. We need to know when the market is in a bullish state, where you should look out for buy opportunities. I need to know when the market is in a bearish state, where you should look out for sell opportunities. Yeah. So the next state of the market, or the next market structure we've got, is a consolidating structure where price creates series of equal highs and equal lows formation. Where price creates series of equal highs and equal lows formation. So the market pushes up. Maybe it can start from a low or a high. So the market could start from a low, pushes up to create a high, comes back, creating an equal low, pushes back a high, draws back a low, pushes back again, a high, a low, a high, a low, and so on. So this is the market on a consolidating state. Yeah, market structure is ranging, would say, yeah, where price creates series of equal highs and equal lows formation. So the market is neither bullish or bearish. We can only buy and sell in this type of market. We can only buy and sell in this type of market. Yeah. So this is the market created series of highs here, equal highs and series of equal lows. So we buy from this low and sell from the highs, from the equal highs. Buy from the equal lows and sell from the equal highs. So if I have to look out for trade opportunities, we should first confirm that the market is consolidating by at least identifying two equal highs and two equal lows, having this as the first low, the first high, first low, first high. So we can confirm that the market has created two equal highs and equal lows. So following up, you can look out for buy opportunities on this third equal low. Yeah, look to buying because we expect price to push up back to these highs. And when price gets to these highs, we can look out for sell opportunities because of what happened previously on these highs. Yeah, the previous sells we got. So there's a tendency and there's a possibility of seeing price sell from this same high. So at this point, look out for sell opportunities. Look to buying as well from this area back to these highs. Yeah, then sell again. So in this market state, you have to look out for, you can both buy and sell. Yeah, we can both buy and sell in this consolidating state. So, like I said, with the help of market structure, we can know the trend direction. That's one of the things we can do with the help of market structure. We can know the trend direction. We can know the market direction, would say. So at this point, we can say the market is bullish. Market direction is bullish because we've got price, creators of higher highs and higher lows formation, and market direction is an upward direction. The market is in an uptrend, would say. The market trend direction is an uptrend trend. Yeah. So the market is in an uptrend at this point. So with the help of market structure, by identifying series of highs and lows which are higher than each other, we can tell that the market is in an uptrend. The market is pushing to the upside. Yeah. And yeah, we can also know the potential reversal points with the help of market structure. We can know the potential reversal points with the help of market structure. So what I mean by this is that as the market has been creating series of higher highs and higher lows at this point, as the market has been creating series of higher highs and higher lows at this point, when this market structure wants to change, when we want to get a shift of structure, yeah, we'd see either of these highs and lows broken. We'd see these lows, would say broken, because the market first last created a higher high at this point, and this was the last higher low that was formed. Yeah. So instead of the market to continue creating higher highs and higher lows, what the market would do if they want to be a shift of a shift of structure, yeah, the market would like break past this low, this last higher low formation, pushing back up again, creating another high, but a lower high. Remember, this was the last high, and this is a new high that has been formed. Why the new high that was supposed to be formed should be what? A higher high formation, higher low, and so on. But instead, the market came to form what? A new high, which is what? A lower high. Market comes to form a new high, which is a lower high. And the market broke below this last low, forming a new low, which is what? A lower low. So the market, we can say the market has actually shifted from what? A bullish market to a bearish market, because we've got a break of previous highs, previous higher highs, and previous higher lows. So the market is now what? In a bearish state. Yeah, because the market was supposed to create a higher high at this point, but instead it came down to break below this low, creating a lower low and creating another high, which is what? A lower high. Creating another high, which is a lower high. Yeah. So the market, with the help of market structure, we can tell the potential reversal points in the market. All we need to do is to pick out those recent highs and recent lows. Yeah. And wait for price to break below it, to break below the last low, the last recent higher low. We'll say the recent higher low. Yeah. Wait for price to break below the recent higher low, creating a new low, but a lower low formation, not a higher low this time around, but a lower low. So this indicates that we've got a shift of trend, a shift of structure from a bullish structure towards a bearish structure. So this is the second thing we can do, or we can know with the help of market structure. The first one I mentioned is the trend direction, and the second one is to know the potential reversal points, the potential reversal time, would say, or zones or areas in the market. With the help of market structure, we can know that. And the next thing we can do or know with the help of market structure is we can identify potential reversal points in the we can identify support and resistance levels in the current market structure. Yeah, we can identify levels of support and levels of resistance with the help of market structure. So how do we identify levels of support and levels of resistance? Because these levels are actually important. The levels we've seen the buyers and the sellers react on. The levels we've got buy reactions. We've seen price buy on previously. We've got series of buys and series of sells on these levels. Yeah. So these are important levels which we need to identify, which we need to acknowledge when it comes to working with market structure. Yeah, market prediction. So with the help of market structure, we can know levels of support and levels of resistance. So at this point, the market formed a level which is a level of resistance that got broken, now turned support. Because we can see these past sells, price sold the first time, dropped to the downside, pushed up here, so the second time as a resistance, and it's pushed above this level, coming back to retest this level, turn this level of resistance towards a support level. So we can tell that we got a level of resistance and a level of support at this point. We had previous levels broken and retested. Turning these levels of support to levels of resistance and levels of resistance to levels of support. So in an uptrend market, there are usually levels of resistance that are broken and retested, now turn support. As we've got here, let's call this a level of resistance, which we can see past buy reaction, past sell on. Yeah, we got price push up to this level and drop to the downside as a resistance. So there was a break and retest of this level. Price bought as a support the first time, came back to the same level, bought the second time as a support. So with the help of market structure, we can be able to identify levels of support and levels of resistance, levels of same price buy on previously. We've got past buys and past sells on. Yeah. So that's the third thing we can know with the help of market structure. The first one I mentioned is the market's direction, right? That's if you can be able to spot the highs and lows, which can be series of high highs and higher lows, we can know the market direction. And the next one is knowing potential reversal points in the market. That's identifying the recent lows, waiting for these recent lows to get broken, or identifying the recent highs. That's if you want to get a shift of trend from a bearish market to a bullish market. So, okay, let me explain that shift of trend from a bearish market to a bullish market. For an example, we've seen this market create series of lower highs and lower lows formation in a downtrend. So if you want to get a shift of trend from this downtrend market to an uptrend market, or this bearish structure to a bullish structure, we'd see price break past these highs, this last lower high, comes back, create a new low, pushes back again, and so on. So when we see this high is broken, we can say that there's a break of structure, because this last lower high, remember the market has been creating series of lower highs and lower lows formation, and this was the last lower high that was formed. But instead of the market to come create what? A new lower high formation and a new lower low and so on, the market instead did what? Broke past these highs, which a break of structure has happened, right? So the market is no longer is no longer creating series of lower highs and lower lows, but the market is now creating series of what? The market has created a new high, which is a higher high formation, and a new low. Remember, this was the last low, and this is a new low that has been formed. So we can say that we've got a shift of structure. We've got a shift of structure from a bearish structure towards a bullish structure. So the market keeps moving that way. So with the help of market structure, we can firstly know the market direction, that's the trend direction. Secondly, we can know the potential reversal points in the market by identifying the recent highs and the recent lows. Yeah. And thirdly, we can know we can spot out potential levels of support and levels of resistance with the help of what? Market structure. And the next thing we can do with the help of market structure is to know the swing highs and the swing lows in the market. We can know the swing highs and the swing lows in the market with the help of market structure. So what do I mean by swing highs and swing lows? As the market is moving in an uptrend at this point, as the market is moving in an uptrend, this uptrend structure, yeah, we got these that, yeah, as the market is moving in an uptrend at this point, creating series of higher highs and higher lows formation, the market first creates a low here and a high. Market first create a low here and a high. So in between this high and low, there's a swing move. In between this high and low, this is the swing move, yeah? So the market created a high and a low here. This is what the swing move. The high and the low, this is what the swing move. The swing move is the move that connects the highs, the recent highs and the recent lows. Yeah, so this is just like a retracement, or we'll say a correction. This is the low and this is the high. So this is what a swing move formed at this point. This is a swing move formed at this point because the market connected what? Because there was a connection between the high and the recent high and the recent low. The same thing is applicable to a bearish market. The same thing is applicable to a bearish market where price pushes up, creating a low and a high. And that connection between the high and the low is a swing move. So let's say this is what the high and the low that's been formed. This is the high, this is the low. Yeah. So this move in between this high and the low is a swing move. This is just the correction. The swing move is more like the original market direction. It's more like the overall direction of the market, of that market structure, yeah, of that market direction or that market phase would say. So being that we've had a high here and a low, so this is the swing move, the sell to the downside, and this is just what a correction or a retracement. So this is what the high that's been formed there and the low that got formed at this point. So between this high and this low, this is what the swing move, the original move, like is the move to the original market direction would say, because the market is on a downtrend. So the swing move is usually the a sell move, being that the market is on a downtrend, and the market being in an uptrend. The swing move is usually a buy move. Yeah, the connection between the recent low and the recent high. These moves upwards are just correction or retracements. The same thing is applicable to an uptrend market. The downward move are just corrections or retracements in an uptrend market. Why in a downtrend market, the upward move are corrections or retracement, but the swing move is the original move to the market's direction. Yeah. So I don't know if you guys are following up. I don't know if that was clear. Yeah. Is that clear? Yeah. And the last is the market behavior. We can tell the market behavior with the help of market structure. Like we said, looking at the market and understanding that, we can easily point out when we've got a shift of structure. Oh, we're left with a few seconds. Let me just end this session, then create a new link for us to round up here. Just end this. We're left with a few seconds because my time is limited on this platform.